So what's going on with mortgage rates? Good news. Well, unfortunately, bad news for the economy is good news for mortgage rates and the housing market. Confused? Let me explain. My name is Dan Free. I do this report on a daily basis to inform you guys what's going on with real estate. I don't know really what's going on with prices, but I'm going to show you guys what Case-Shiller came out yesterday. It's going to make a lot of people's heads explode because we're seeing pockets of areas that I said are going to be probably down 10% this year. And my predictions are pretty much right there. But I also said there's going to be major areas that basically are flat and other areas that see appreciation. And a lot of people denied that and said, there's no way the housing market's going to get crushed. So in today's report, we're going to talk about all of this stuff. So here's our mortgage rates are. We're going to go over that at the end of the video. But the basics I want to go over today is how bad news basically in the economy and economics is really good news when it comes to mortgage rates, because the Federal Reserve, their main goal right now is they want to crush inflation. How do they do that? Well, their technique is, well, if we put people out of work and we push up interest rates so people can't really borrow or don't want to borrow, that's going to have to basically reduce people's spending. Thus, there's not going to be as much demand for goods and services, so the prices will come down. Okay, so that's what they're talking about. So in this week's events, here's what we see. We saw yesterday consumer confidence plummeted. It went from 114, was supposed to go up to 116. It went down to 106. That was great news. Well, it was bad news for all of us, but it's great news saying the Fed loves this data. The next thing is that we have the JOLT index. This is how many job openings there are. How many companies are out there saying, okay, we're looking to hire right now. Okay, well, it was 9.16 million at the last reading. It was supposed to actually increase by 300,000 to 9.4. All right, what did it come in at? 8.8. It just dismal numbers. Now, this is also validated right now by the ADP farm payroll numbers that just came out this morning. And while we're doing this video, you might even see some other data come up here because this is live. Okay, so ADP payroll numbers came in. The last reading came in at 312,000 new jobs created. Okay, they expected that to plummet all the way down to 195. Where'd it go? 170. Or 177. So think of that. That's not quite a bit, but it's about 40% below where we were last month. So this is bad news for people looking for jobs or that might be out of work, but the Federal Reserve is applauding all this. And then we go to the GDP. GDP last reading was 2. They expected it to go all the way to 2.4. It's down to 2.1. Other data coming in today is pending home sales. I'll go over that tomorrow because that's not really reflective of what we're looking at today. But what I want to show you guys is some of the news coming out right now. Fed officials sees rates close to peak, but different how close they are. So some of the Fed officials are saying, okay, we're good right now. You know, rates are in a restrictive area, so we don't really need to do anything. And others are saying, well, might be more rate hikes to come. So let me put this into perspective. They're not going to come out there and say, okay, our job is done. Why? Well, because if they do that, all the markets are going to go crazy. Stock market's going to go nuts. Now they know the Federal Reserve's direction. Mortgage rates are going to plummet because now they know the Federal Reserve's direction. So the Federal Reserve is basically holding their cards tight to their chest, and they keep saying, well, we're still data dependent and things, we're going to monitor this daily and daily and daily. We think still inflation's too high. But they really don't tell us anything. But the data coming in that we see on a daily basis is fantastic. Well, again, fantastic on the Fed side, but not so fantastic for our economy. Next thing is we want to see what's going on in the stock market today based on some of the news that's out. Well, the stock market's applauding this as well. They're still sitting on the sidelines saying, we still need further direction from the Fed because you have, half the Fed saying they need to raise rates, the other half of the Fed saying, oh, things are okay. It's planned, folks. They plan on saying this as the data comes in, and the data keeps coming in. That's basically good news, nothing but good news on the inflation front. One other piece of the puzzle I want to talk to you guys about is house prices, okay? People all over the mainstream media and all over YouTube are making tons of money and getting tons of views because they're sitting there saying the world's going to end, the markets are crashing, housing's going to fall off the roof. Here's the Case-Shiller index. This is an index that came in just yesterday telling us how house prices are doing in all the major cities. So what you're seeing down below, or what you're seeing on the screen right now, are the top cities and where they are. There's 2 pages of this. So hold on. When you're looking at this data, you can see over right through here, okay? This is the 1 year change. So last year, about this time is when we peaked out. Okay, so if you see here, for example, Atlanta is up 2.1% so far in the past year. Okay, it's not down 10, 15, 20, 30% like a lot of people were predicting. I did come out, and you could check out my video from the beginning of the year. I said a lot of markets, especially in the West Coast, are going to see probably about a 10% correction. Other markets are going to see nothing, and other markets are actually going to just see standard appreciation. Well, let's check and see my predictions. We go through, for example, I'm in Chicago. Chicago, so far, we have a 4.2% appreciation rate. That's our normal rate, folks. Okay, that's our normal rate here. But if you go down to certain areas like this, Las Vegas, down 8%. San Francisco, down 9.7%, getting close to that 10% that I predicted. You go through Seattle, down 8%. You go to Phoenix, down 7%. Another area through here, what's down 8%? Las Vegas, I already said that one. But do you see a lot of these areas? You see Chicago, up 4%. Cleveland, up 4%. Dallas, that was predicted, down 4%. Denver, Detroit, up 2%. But let's go down to the next page. You're going to see a little bit more data here. But I want you to focus in on this, guys. You don't see a 20, 30% reduction. You see Atlanta, flat. This whole page, there's not one city on this page that's in the negatives. Okay, so that's why I try to explain to everybody on a daily basis, guys, you need to be data restrictive. What I mean by that is, if you're looking for a house, don't take mainstream media's point of view. Don't take YouTubers' point of views. Reach out to a realtor in your area. See where prices are. And then we have tools. We have tools such as rent calculators. Now, you might say, Dan, those are a bunch of BS. I don't really care about that stuff. Well, just do an analysis. Is it cheaper to buy, or would it be cheaper to rent? Long term, if you buy, you're going to get probably a 3, 4, 5% appreciation rate on your home every year. If you're there for 15 years, look at that. That's probably you're going to go up 30, 40, 50% in value. As you're buying down or paying down that mortgage, you're building equity in your house. Now, I'm not saying home ownership is for everybody. You need to do your research. Are you ready? Is your job ready? Are your finances ready? Is your credit ready? There's a lot of student loan debt starting to kick back in. We have programs to help you out with that. There's programs that are already approved through the federal government you don't know about, and you can check that out down below. It's called My Loan Sense. It's student loan payment assistance. So this is where we're seeing for home values throughout the country. So now let's get over to where the bond market is right now. And here's where the bond market is based on this data. My prediction today is the bond market's going to go up in price. Okay. And that's exactly what's happening today. Why is it going up in price? I'm not Nostradamus. I'm not, predicting this. I'm saying based on the data we had today that just came out with our economic calendar right here, we have ADP payroll numbers dismal and GDP dropping. Okay. So based on that two information, that's telling us the Federal Reserve might be backing off of rate hikes. So this is what's going on in the bond market. What I follow on a daily basis is right here. This is the mortgage bonds trading on Wall Street. What you're seeing right here on the screen is the price of the bond. All you need to know is the number next to it. What's the number next to it? If you squint, it is up 6 basis points. What does that mean? Well, all it means is if bond prices, which you're seeing on the screen, if bond prices go up, rates go down. Okay, so a 6 handle on the MBS is really going to do nothing for rates, but let me show you where rates ended yesterday. This is where rates ended yesterday. So if you notice on here on the 30-year fixed, just a week ago, rates were almost 7.5, 7.49. Where are they today? 7.12. So they're down 0.3% this week alone. So if you locked in with somebody, we have a tool that you can analyze it or let us analyze it to see if we can get you a better rate or maybe lower fees in this while you're seeing rates coming down. So how do you do that? And how do you reach out to us? Well, my name is Dan Free. I do this report on a daily basis. I'm a mortgage advisor licensed in all 50 states and would love to help you. So if you're looking to get pre-qualified, maybe you're looking to do a debt consolidation loan with a HELOC, paying off those high interest rate credit cards with the equity you have built in your house, or you just want to check out and see, Dan, I locked in. Can you guys do better? Let me show you how. So go to therateupdate.com. You're going to go over here to loan estimate. You're going going to click that, and what it's going to do is ask you a few questions. Then you're going to upload your loan estimate from your lender. What your lender has to do within 3 days of pulling your credit, they have to send you an analysis saying, okay, here's what we can get you approved for, and here's what the fees look like. Okay, so that's how you do it. If you want to reach out to us for any assistance on anything else, please visit us at the Rate Update. What you can do is apply now right over there. It's going to go through a few questions with you just to kind of vet you out to see if you're ready. If you are, then it's going to launch you to our calendar to schedule a meeting with us. But if you're out there and you're like, Dan, how do I give you guys a call, or how can I reach out to you directly? Here it is. You can give us a call at 844-775-LOAN. That's 844-775-5626. Or you can email me, or you can email me here. So there's 2 ways of reaching out to us. So thanks so much for watching. I hope you find value in my channel. If you do, I'm going to ask you, let's ask you 2 things to do today. One, if you like this video, please give it a thumbs up. The other thing is, if you have not subscribed yet and you like what my content is, please don't forget to subscribe down below so every time I post a video, you get an alert. Thanks for watching, guys. God bless. Hope to see you tomorrow. Bye-bye.